This video is brought to you by SoundMoneyCampaign.com. Be part of the solution. Visit SoundMoneyCampaign.com today. You were recently interviewed on the Ellis Martin report, and you were discussing that China is actually considering backing the yuan with gold. And I read an article the other day about this, and I'll just quote the article. According to the media reports of early July, the People's Bank of China is mulling the possibility of phasing out the dollar as the reference currency for the yuan exchange rate and start using gold as the reference point. So is this a threat to the dollar, do you think?
Well, there are several threats out there. Yes, it is. And I think it's only further confirmation of the fact that the dollar is being usurped by other currencies, and there hasn't been one that's come to the fore yet, although the yuan's probably going to be the one. So let me elaborate a bit. You have all these trade agreements between, Russia and China, China, India, Brazil, even Australia, where they go direct for each other's currency. So they trade directly, currency to currency, and circumvent the U.S. dollar altogether. The only place where that hasn't held is the petrodollar. You still have to use dollars for oil. And anyone that tries differently usually has a consequence to pay. So certainly, I think it's one more step toward an ultimate, the ultimate reserve currency, which so far has always been gold-backed. Of course, the dollar isn't now, but it was, and that's in fact why it was chosen. The old adage, sound as a dollar, as good as gold, after Bretton Woods. So the yuan coming in as a gold-backed currency, I think, is a very strong possibility. And if that were to occur, I think you'd see very much similar situation in what's taken place in monetary history already. In most recent times, you saw the pound sterling backed, precious metals backed, and then that was degraded to fiat only, and that was usurped by the U.S. dollar. That was gold backed, and then that will be usurped at some point, probably by a gold-backed currency. Whether it'll be Chinese or not, I don't know, but I think it probably will be.
And I know you've also said, and a lot of people also say, that the one who owns the gold makes the rules. So if China does back the yuan with gold, what does this mean for China's power, and what does this mean for the power of the United States?
Well, there's been a shift that's been going on for quite some time. I mean, I kind of called that, along with others, about the year 2000. I said that we're going into a macro shift in the world economy. We're going from things we want to things we need. It'll be a commodity super cycle, and that the currency markets will be in disarray at some point, that you're going to see a general trend of wealth going from the West to the East. And all of this is taking place, and it will continue. So if you look at it without just the gold backing, which is very much part of the financial system over long periods of time, especially when things go haywire, it's about the only way to get stability again. If you just look at it from an Austrian perspective, the idea of capital really isn't, some piece of gold sitting in the ground somewhere. The idea of capital is a means of production. Wealth is being produced, and that's exactly what China is doing. They're producing a massive amount of wealth. I mean, go to your local Walmart. I mean, go to any store in the U.S. It's pretty hard to find anything in those stores that are manufactured that doesn't come from China. So they are producing, and the United States is producing pieces of paper that they're giving them to get this real wealth into the country, and that can only go on for so long. So once China not only establishes a base where they can feed their people without any imports, and can it be accomplished? And I would guess certainly it could. Once it becomes stronger economically and more rounded, better, more well-rounded, they will have the financial wherewithal to pretty much call the shots. Not that they don't have a great deal to do with it now. I believe they are calling the shots behind the scenes in several areas, but I don't feel or think that they're strong enough at this point to just say, this is it, we're doing it now. In fact, and the Chinese perspective is long term. I mean, they think out several generations. So they're not in any huge hurry, and they don't really want to rock the boat. I mean, if they say this is it, we've got the strongest currency, the dollar's dead. I mean, they're shooting themselves in the foot because they own so much of the U.S., so much of the bond market, so much U.S. dollars, so much of the debt market. So they're going to transition, I think, in the most to them and probably to the globe, I guess, appropriate way. But there is a fight going on, in my view. I wrote about that in the Morgan Report a couple issues ago. And the idea that the New World Order is a bunch of people that all get along, there's going to be one, super somebody running the whole thing is inaccurate, in my view. Doesn't mean that there isn't a power grab for the top of the financial system or the monetary system. There probably is, but it's two factions in my very studied view. You've got the Anglo-American Empire, which is London-based and has been the top dog for a very long time. And now you have the Asian base. And this is going to go back and forth, and both want it. So you've got kind of a fight going on. It's not something you're ever going to read in the mainstream financial press, but that's the reality. So it's not like London is saying, oh, geez, we're losing, China. Okay, fine. We'll just team up and, have the global dominance. No, it's a battle going on, and one side is waning, which is the London-based financial Anglo-American empire, and the other is waxing or coming up, and that would be the Asian-based China, Russia, and you could actually use the BRICS if you want, Brazil, Russia, India, China. And so, again, and look at what's going on in the Middle East. I mean, it looks what's going on in Syria. I mean, it's pretty apparent if you just have your eyes open that this is not some children's game of Risk. This is real world events that are taking place, and people are in the streets all over the world. This is very, very serious.
Many analysts are warning that if China does try to back the yuan with gold, that it would hurt China's economy. But if China was using sound money, wouldn't that actually help their economy?
Well, there could be arguments on both sides, and again, it's not so much a function of having sound money, although that's certainly part of it. And I don't want to sound like I'm not, on the mission I've made my life about. But there's been other instances, like during the Opium Wars, where silver was abused, and they really took it to the Chinese. The Brits did by manipulating the price. So, I'm a pretty good thinker. I certainly can't think of everything, but I'm a pretty good reader, and I've studied, and so. I love to say, Elijah, yeah, if they go on the gold standard, that's going to be stability. It's again, it comes back down to the reality of something extremely simple. So I'll simplify it. An ounce of gold has the same mass anywhere in the universe, and it never changes. So it's not gold. What it is it's, one, how many pieces of paper that gold is worth, or the value that the market puts on it. And more importantly, especially in today's world, the psychology behind it. So if you had enough of the media, the controlled media, explaining to people why this is a bad idea and why it's going to crash the dollar or crash the yuan, or some psychological babble that the majority buys into because they can't think for themselves or think critically, a lot could happen. So it's really not so much a function of the reality of, this is a stable currency. It's a function of how that stable currency is perceived. And, school's out on that as far as I'm concerned. I mean, these people could convince people that, 1984, war is peace, freedom is slavery. I mean, how bizarre is that? And yet people bought into it, and we're buying into it now. I mean, it really, how passionate I am, and what I spoke about at the forum. But it just, I want to take people and just grab them by the shoulders and shake them sometimes, because they're just so diluted by stuff that matters so little, what some TV star is doing, or some, entertainment. And they're really wasting their minds, in my strong opinion, and they're not paying attention. And of course, under those circumstances, you can be deluded into believing almost anything. You can believe that freedom is slavery. You can believe that war is peace.
I wanted to quote again from the article that I mentioned earlier. Quote, Beijing's possible move to back the yuan with gold would not be meant as a strategic measure to strengthen the national currency and increase its attractiveness as an investment medium. Rather, it would be a flaunt aimed at demonstrating to the world, and to the USA in particular, that China is capable of taking the risks associated with a departure from the dollar standard. So, David, do you think China is ready to take these risks?
No, I don't. I think it was a trial balloon. I think I want to see what the reaction is. I don't think that they're ready to do it. I think that they need, again, a better agricultural base. I mean, they have internal problems. I mean, there's a variety of opinions. I haven't been to mainland China quite some time. I still go to Hong Kong almost every year. But, and even being there doesn't make it, like I know more, but you do get a better feel. Plus, the people you get to speak with are, most helpful. But nonetheless, they have problems, we have problems, but they're still growing. They still have a long-term, view of the world. I don't think that they're really ready to do it, but I think this is sort of a shot across the bow. I think this is kind of a wake-up call. Not too many people caught the article. I did. I sent it out on Twitter, as you said, and it's something to pay attention to because the shift is, in my view, unstoppable. The repercussions are unknown, but I think great. And I think at some point it will take place. But my opinion on it, no, they're not ready to do it yet. But they're ready to make noise about it, obviously. You just read the article. So what will the reaction be? And I think the reaction will be to do absolutely nothing, ignore it. Once Bernanke, Helicopter Ben, is moved to the side and most likely we get this Janet Yellen. I mean, I've been saying that Helicopter Ben is going to be put off and we'll have Janet. And Janet, I call her Supersonic Yellen because you think dropping money from helicopters is going to destroy the currency. That's nothing. Wait until they dust off the Concorde and start dropping money at Mach 2. I mean, this is serious, again, serious stuff. And people don't see it because it doesn't affect them directly. It's a whole different scenario than it was in the 70s. In the 70s, it was pretty much just internal in the U.S., and there were cost of living adjustments, and the wages went up as inflation went up. That's what happens this time. This time you have a global economy, and you got to compete against the Chinese and the Indians and all these other groups that will work for far less per hour than the average American will. And so there isn't any price or wage pressure on anything. Prices are going up, but wages are going down. The job market is in a huge disarray and much worse than it is portrayed to be by the mainstream media. So you have a increase in prices or a decrease in the value of the currency is probably the best way to think of it. So it takes more and more units to buy something. And your wage rate is going down, not only in real purchasing power, but in actual purchasing power, meaning, or in actual dollars per hour, let's say. A lot of people that have found their job after being laid off find that they're working at a rate that's less per hour than they were working before. So there's this deflationary push at the same time that this non-existent inflation, that, by the way, if you use food and energy and services, the month of June alone was 2%. Well, 2% over 12, that's 24% a year. Now, I'm not trying to make a case of 1 month means that much, but it means something. And then it certainly means that this idea that food and energy don't count are just so preposterous. I mean, and yet most people, if you stop them on the street and ask them, are food and energy in the inflation index, they would probably answer, well, yeah, of course. And of course, we all know that we study this stuff. It's not.
All right, David Morgan, thank you so much for joining us today. People can find you at themorganreport.com, and I'll put links in the description to your YouTube channel and Twitter. And is there anything else you'd like to add before we let you go?
Yeah, one more thing. On the dollar cost averaging, I think there's a situation that's available for most small investors. Large investors could use it too, but applies pretty much to the little guy, and that's silver123.net. That's silver123.net. Check it out. It's a program. You can save gold, you can save silver, you can save both. You can even use platinum palladium if you want. And it forces discipline, forces a dollar cost averaging program. You start for as little as $50 a month. And if you're so inclined, there's also an affiliate program that goes with it. So you could actually use it to start a small web business if you wanted to.
All right, David Morgan from the Morgan Report, thank you so much for joining us today.
My pleasure. Thank you.
Go to financeandliberty.com and subscribe for free for more interviews and financial insight.